And welcome back to Bitcoin Advisor channel. My name is Chris, bringing it to you here from Westlake Village, California. It is going to be December 27th, 2023. And well, I just wanted to wish everybody a Merry Christmas and a Happy New Year. And thank you all this year for tuning in. I hope I've been able to give some guidance in these turbulent markets. And I wanted to harp on this idea of what is the macro trend. What is the macro trend going into 2023? We are still in a bear market for Bitcoin, and one of the best ways I identify trend is on the weekly time frame when price is making lower highs and lower lows. So what is the greatest saying of a trader? Let the trend be your friend till the end of the trend. And well, we're going to keep letting it do that. And I just want to identify some clear pivots, some areas to identify on the weekly time frame so we could begin to shift our bias from bearish to bullish. And starting it out here, I'm just going to connect these nice little trend lines here. Actually, I think we can draw this going all the way back to the tippy top peak right here. And that'll come in like that. And I do think there is a potential threat of a bounce up actually into this region. And that would be where I would expect the trend to continue to play out from there. And I do think we're a little bit more likely to bounce going into the first month of the year than to make new all-time lows. Part of that has to do with, one, open interest is extremely low. We want to see open interest higher, suck liquidity into the market so we can spit it back out. That's typically how it works here. And something else to notice. What else? So, first warning sign, 21.5, if we can take out that area. Second major pivot here, I'd say 25,000. As long as we are below 25,000, I'm going to expect that trend to continue going into 2023. And why is that? Well, bear markets typically have two phases. One is the first phase is the liquidity cycle downturn, which is basically fiscal tightening. You got higher interest rates, the Fed unloading its balance sheet and sucking liquidity out of the market. So that was the first phase over the last pretty much year. And that's why we've seen, the S&P down 19% for the year. The NASDAQ down 30% for the year, kind of breaking back into that falling channel that we talked about. Well, the Dow Jones, that was the one that needs to break back down into the channel. That would look pretty bearish if that does happen. So NASDAQ down 30%, S&P down 20%. You've got Bitcoin down. Bitcoin and Ethereum down, both draw down, over 60%. So we're starting to see, the end of phase one liquidity cycle downturn. The second phase is a liquidity crisis in the credit market. So when is the second leg of the bear market going to take place? And that's what's key here, is identifying in 2023, when is the second leg of the bear market going to happen? And when is that credit crisis going, the liquidity in the credit market's going to dry up? And we're already seeing the cracks with Japan and the UK as their governments have had to bail out the bond market. So last year, British pound got hammered. To give you an idea, when a major currency in 2022 draws down 23%, it's going to have problems. Same thing with the Japanese yen drawing down 25%, and the euro even better. So you can see all these foreign currencies are rallying against the dollar, getting a bit of a relief rally. On the other side of the fence, the dollar has come down, and basically, we are still in a position where I think, the dollar could bounce first, which would be against my opinion that Bitcoin bounces in the first month. But typically you are going to get some bounces off this green 55 on the weekly time frame. If we do get a bounce, I suspect it comes into this green box, and then it is lower, higher, not on the daily and the weekly time frame. We got several drives of hidden bullish divergence formulating, coming back from this pivot right here, as the price is making, 1, 2, 3, 4, 5 higher lows versus lower lows in price action. Higher lows versus lower lows. So a little bit of bearish divergence, and something to mediate our kind of upside bias going into the month of January. If the dollar does start to rally and really starts closing dailies above 105, I'm looking for 106 is more conservative for that bounce to take place, and risk assets would pull back at that point. So we expect the second phase of liquidity downturn comes in the form of a credit crisis along with a global recession. The second phase, they priced in the recession and the PE ratio is going down. So what matters is they price in the recession and the credit crisis happens at the same time. So right now, so if phase one ends Q1, and if the recession doesn't come till Q4, then we have room for a bear market rally for a couple of months. If the recession starts sooner and the credit cycle of the bear market gets priced in at the same time, I believe the S&P 500 will go down to $3,000. As a matter of fact, the technicals already tell us that based off the 6-month bearish engulfing candle, give us a shot at a minimum down to the yellow 21 at 2,900, call it $3,000, and the COVID lows, which would be March 2020 at 2,100. Certainly a possibility and not out of the cards, and would be right in line with this trend line coming in at about $30,000. So back on to our weekly chart here. And we're dancing around the purple 200, getting all consolidated. If we start to lose that 200 exponential, that's your lucky socks. We're going to come down and test this trend line. If it breaks, it is not going to be pretty for the rest of the world. So my point here is that, so if Q1, again, the second phase, they start to price in the recession. It's something like, I don't know, 400 out of 500 companies have not priced in the recession yet for 2023. And so if we get recession plus credit crisis, S&P below 3,000 or around 3,000. If we get, price in the recession in Q1 and then credit crisis in Q4, there's this gap in the middle of the year where the price or where the market could essentially rally, right? And what we'd be looking for in a rally type situation is for the dollar to really pull back. And we did say coming into based off of the quarterly and the monthly bearish divergence, we are expecting the dollar to come down to about $100 in the first quarter. Give or take $1 or $2. And that would, dollar down, risk assets should bounce. So that is the one potential threat for an upside move versus the downside move. Actually, I'm going to leave that trend line in. And really, we could start to, see the downside initiate with any kind of a closure here below, 104, or this prior daily low. All right, so that's it for the dollars. Hopefully I kind of, was able to put words to what we think 2023 macro is going to look like. And in other words, its recession is coming, stock earnings are going to fall, and recession stocks per share right now, the S&P 500 should be down at 3,600. And with a 5% terminal rate next year, the market is pricing in 2 rate cuts for the US, and the market is pricing in 5 rate hikes for the ECB. People are going to get long the euro and yen in Japan, so a little bearish for the dollar. Remember, dollar plays opposite of risk assets in Bitcoin, gold, and silver. Biden just passed this $1 trillion spending bill in exchange for ending some of the, I think, Trump tax cuts. China's reopening, jobless claims are down, and GDP is slightly up. So, again, I think this is going to be one of the greatest liquidity grabs in history, and I think it's actually already started with this Dow Jones bear market rally. And you can see the Dow Jones came within 3% of its all-time high, and I don't personally think stocks are going to make new all-time highs next year. Going into a recession, going into a bullish dollar, does not make sense. I do think we'll probably be sideways for most of the rest of the holidays till going into next year. But the early warning signs of a potential bottom being formed and put in is are here, and this is a jewel buy signal, almost a perfect one to close out the week, as it's not finished yet. And so if we do, close anywhere below the prior closing low, that'll not look good, and this will just be another lower high, and we'll expect a lower low. You can mediate that with the 2-day right now. 2-day volatility is on the floor, and we'll cross up today above 17.2, tomorrow. And I do expect the 2-day volatility expansion, which is it's just beginning to expand. So it looks like we are potentially getting the lift off on the 2-day, and the daily is down, and we'll cross down today below 16,721. So hanging on by a thread here. The downside displeasures could be initiated with any kind of a cross down on the Stokes and expansion on volatility. And the 12-hour is pinned on the floor, cross down. It does look like Bitcoin would want to take a little bit of a leg down. And so, confirming this as a lower high, I just wanted to show a potential trade setup here. So I think I did one, but it did not go out on the last video. So 3-hour just closed, 4-hour just closed. So you've got volatility expanding. You got momentum to the downside. You got several drives of bearish divergence, right? Coming back from this pivot right here. So 1, 2, 3, 4. So you would expect a move to the bottom side of the range. All right, quick trading setup here. To be a trader, right? To have an investment strategy, you must have an entry point, an exit point, and your risk management. Looks like a fairly decent setup on the 4-hour time frame for Bitcoin. So the ideal entry would have been right here, maybe on this closure. As we put in that high, you would have confirmed the high right here. In fact, that would have been, probably my entry right here. But now we're late in the game, right? So we missed the perfect entry, and do we want to get a continuation drive off of this? And here's what I would say based on the jewel strategy here. Technically speaking, if you're targeting a move down to this horizontal, I personally would want to put a stop loss right above here. So you would have your entry right here, your exit right here, and risk management. Depends on how tight you want to make it. You could put it above the prior wick high, or you could even put it right above this one. I personally going to be a little bit higher. Something like that. Again, this is not investment advice, not financial advice, but it does look like this is going to expand to the downside. You can move it on to the hourly time frame and see that we're getting continuation, and momentum did just cross to the upside on the hourly time frame. The 2 hour is still down, saying continuation, and it does look like Bitcoin wants to come test the 16.5 region. So, you know, stop loss, entry, exit, risk management. That's it for today, guys. I'm going to be trying to bring back a video a day going into the new year. So make sure you tune in, like and subscribe, and put a thumbs up for the video. Thanks and have a blessed day.